All right. What is up, tycoons? What up, traders? Super excited. We're looking at Reef today. Okay. Not Reefer, but Reef. All right. We're going to break it down on the daily chart. We're going to go over these three levels right here, the 61.8, the 50%, and the 38.2. We're going to go over some chart patterns as well. And then we're going to go over divergences along the token price and the relative strength index down here. Okay. So you're going to learn a lot. It's going to be very informational, very educational, and helpful, right? None of this is meant to be financial advice, but this is meant to give you guys an edge. Okay. Trading, investing, you need an edge, right? It's like going to battle. It's like going to war. Okay. You have to bring the right weapons. You need as many weapons as you can bring to there, right? To give yourself an advantage. And you can't bring a knife to a gunfight. All right. So this video is really going to help you guys prepare day in and day out, teach you what to look for. And then we're actually going to go over, examples of this stuff working, right? We're going to show you guys all the examples of retracement levels, right? We'll go over a few examples of those in the past, why they're valid. And then we'll go over, the divergences and show you, the profit levels that you could have gotten on these. Okay. So make sure to smash the like button. Make sure to subscribe to the channel. If you guys are new, I'll be dropping videos like this every single week, anywhere from like 5 to 15 videos a week. Try to pump out as much content as I can based on, how I'm feeling. So we're going to jump straight into it and really break it down for you guys. Okay. So the reason that we look at the 38.2, the 50%, and the 61.8% level, well, first off, these are our Fibonacci levels, okay? And what they do is they're going to show you very valid retracement levels for a trend continuation, right? Nothing is going to move in a straight line, either up or down. What it's going to do is it's going to make a move, it's going to retrace, and then it's either going to continue the trend or it's going to break through the retracement levels and try to start a reversal, right? So the first one we're looking at here is we're looking at this big pump down, right? We're looking at this big downward movement, right? And then we get a retracement, right? Look at where we come up and get rejected at, right? The first time we get rejected here at the 38.2 level. So we retrace, boom, we get rejected, right? We can see that right here too. We come down, we retrace, we get rejected, right? So we haven't broken through these three retracement levels right now. We came up here to the 50% here recently, but then we had a bearish chart pattern, right, known as a rising wedge combined with bearish divergence. Okay. So if you're not familiar with the rising wedge or you're not familiar with bearish divergence, I'm going to break it down and explain it to you guys really quickly. Okay. So let's start off with the chart pattern itself. Okay. And we're seeing basically two trend lines, right? We're seeing a high here, higher high. We have that trend line connected, right? And then we have these higher lows forming on the chart as well, right? And it's a tight pattern and we're zigzagging in between here. Once you break this trend line here, you're going to get a move to the downside. All right. So we've already started to begin that move. And we have three retracement levels right here. We're looking to see if this is just a valid retracement, right? We have our swing low right here up to the swing high. So we have our move up, we have our retracement. We're currently at the golden ratio, right? The 61.8% level is known as the golden ratio. Some people call it the golden pocket. Okay. The golden zone, it exists all throughout nature, right? From, galaxies and the stars, to seashells and much more, right? So it's a very valid formula that's going to exist in all of the cryptocurrency markets. Most trading, about 70% of trading, is done by algorithms, whether you believe it or not, even in stocks, right? Not just cryptocurrency. So you have to think like an algo. You have to use some of the levels that algos are going to use. And the Fibonacci formula is one that you can really use to your advantage, right? Now, the best thing that really helps give you confidence and really helps give you an edge is combining signals, right? So what I mean by that is, let's take a look. We're in our three retracement levels, right? We just went over how we're going to get the move down, retrace up, and we're going to be looking for a rejection in these three levels, right? So we're in those three levels currently. Then we have a bearish chart pattern, right? That rising wedge that we just went over. And then we have bearish divergence, right? So now let's look at our RSI down here. Okay. And we have a high and a higher high. We have a high and a lower high. So while this token is going up in price, right, the strength of this token is actually decreasing. So now we have three indicators telling us that we're going to get a rejection, a hard rejection, and possibly a downward move, right? We have the chart pattern,
we have the bearish divergence, right? And then we have our retracement levels. So that is what I mean by combining signals, combining some of these things together to really give yourself that edge that you need. Okay. So now that we've broken down a bearish divergence, and we've basically explained the current price action, right? We're going to see if this is a healthy retracement. We're right here at the 61.8% level. So if we break through here and start to fall, okay, most likely we're going to come down to where this pattern began, and try to retest these lows down here as well. So be cautious of that. And right now, we're really just consolidating right in between our fib levels. Okay. But let's go ahead and go over bullish divergence now. So we have a move right here, right? We're clearly in a downtrend. We have 3 lower lows. If we look at our relative strength index, it's flat right there. Okay. So we're going down in a downtrend. The token is dropping in price, but the relative strength is not falling. It's holding its strength, right? And we can take a look at the move there. And that was a decent move. From there up to those highs, that was 95%. And if you would have held it all the way up to the to the top right there, that was 135%. And your signal was the bullish divergence, right? If we go over here, we have another signal combined with chart pattern, okay? And we have bearish divergence combined with the bearish chart pattern, okay? We have the rising wedge. We're trading in between these trend lines here, okay? And we know that once we break this trend line here to the bottom, we're going to get a sharp move to the downside. We have a high and a higher high. We have a high and a very slightly lower high, right? So as the token is going up, the strength of this token is not increasing, it's slightly decreasing. Okay, that's a bearish divergence combined with the bearish chart pattern. And if we take a look, right, let's just take a look at that move to the downside. Okay, and that ended up being a 31% drop. Okay, so these are things you can use to protect yourself, protect your trade, protect your profits. And even if you want to be more aggressive, you could try to short some of these things. Okay, so those are, the chart patterns that we're looking at. Those are some of the, recent examples. If we go over here to the past, all right, here's another example of the retracement levels working as valid resistance levels. Okay, we have our swing high, connect down to our swing lows. We come down, we retrace up here to the 38.2, and then you continue the downtrend, right? We try to come up, we can't even make it to the 38.2, and we just end up dropping further, right? Here we have a nice bullish divergence though. Okay, and this doesn't mean just because you're below these retracement levels that there isn't money to be made, right? That there isn't signs that you can look for a trade, right? Again, we're seeing some bullish divergence, and we're seeing a very strong one here. Okay, where we're making those lower lows, right? So low, lower low, and then look at our relative strength index and a very sharp, sorry about that, and a very sharp uptrend. Okay. And if we take a look at that move, that was a very nice move from here to there. That was 60%, okay, roughly 60% trade right there, in a very short period of time too. It's not like that took like months and months and months. All right. Now, another pattern that you guys can look for is this one here, and it's the inverse cup and handle. So maybe you're familiar with the cup and handle, but you can actually inverse it as well, right? So we have our cup here, we have our handle, okay, and we break this trend line down here and we get a sharp move to the downside. Um, and if we look right here, we can see that we have a little bit of some bearish divergence as well, right? We have a high, higher high, we have a high, we have a lower high, and we end up getting a very sharp drop, right? And one thing I want to point out is, typically the larger the divergence, and when I say larger, like the longer, right, the more time it's been building, then, the more you can expect to see a bigger move, right? If we take a look at this drop, um, from these highs all the way down to the bottom, okay, we ended up falling very, very sharply over 75%. It went down as much as 80%. Okay. And the reason I mean longer is if we take a look at the yellow line on our relative strength index, here's our initial high, and then here's our last higher high. We have our high here, we have our lower high here, right? But we had smaller divergences in between there as well, right? So we looked at this one already. Then we had this one right here. We have a high right here, lower high, lower high. We have a high, higher high, right? So we're clearly in an uptrend. Then we're also in that bearish wedge pattern, right? That rising wedge combined with bearish divergence. And look at that big fat red candle right there. Okay. These are indicators again that you guys can use. They're very simple to learn and very simple to start on your own. Okay, we'll zoom out and we'll take a look at some other chart patterns that you guys can use to your advantage, right? One of them is going to be the bull flag. Okay, so we'll look at the bull flag first here. And what you want to do is you want to look for a flagpole, right? And it's going to be a sharp move to the upside. And then you're going to pull back a little bit and get this consolidation period. That's your actual flag itself, right? So you have the flagpole, then you get the flag. And once you break this trend line here to the top, you can expect to see a sharp move to the upside. Okay. Another pattern you can look for is the inverse head and shoulder. Okay, so to establish this one, you're really going to be looking for a left shoulder and a right shoulder, right? That's the best way to really look for it and find it, and really help you guys out. Right now, what you need is a left shoulder, a head, and a right shoulder. But if we zoom out a little bit, okay, then it's a lot easier to spot. Okay, once you see a level is coming down and you basically are making these lower lows, you come up and you retrace and it's right around a previous support level over here. Then it's a little bit easier to identify it. Okay, so we have, again, left shoulder, we have our head, we have our right shoulder. We end up coming and playing the pattern out perfectly and beautifully, and it was a very nice trade. And if you notice these wicks right here, this is a lot of people taking profit off of that inverse head and shoulders, and there wasn't enough buyers really to drive the price any higher. All right, so that's the breakdown of Reef. Hopefully you guys enjoyed this video. If you did, please make sure to smash the like button and subscribe to the channel. Really helps out the small channel. And I do viewer requests every single week. Okay, this one in particular was a viewer request. So if you want to see your ticker, your cryptocurrency, your stock even broken down with some nice technical analysis, let me know in the comments below, and I'll be happy to do that for you.